Mastercard just signed a deal that could bust the crypto floodgates wide open. Close to 1 billion credit cards promoting crypto. Their partnership with Bakkt is the latest story to come out that signals widespread acceptance of crypto all around the world. Bakkt even got a taste of that good old crypto volatility earlier last week, jumping up 234% from $9 all the way to over $30 in just one trading day. And that's because the firm is playing a pivotal role in Mastercard's plan to offer crypto-based rewards and the ability to buy and sell crypto to their thousands of partner banks globally. Just the day after the announcement, Bakkt shares zig-zagged up 23%, down 29%, only to settle down 22% at the end of the day, which to me points out that the hype surrounding this partnership could come with some investor misconceptions, specifically about whether Bakkt would actually make crypto mainstream. Now, credit cards with crypto-based rewards aren't really anything new. Companies like SoFi and channel sponsor BlockFi have launched their own credit cards with unique crypto perks. Speaking of BlockFi, they have a Bitcoin credit card already, so if you'd like to earn interest on your crypto and get up to $250 for making an account, check out that link in the description below. But what's different here is that crypto would be baked into the underlying tech of Mastercard, where through Bakkt, any merchant or bank on the Mastercard payment network could offer specific crypto rewards to customers. And this is facilitated by custodial wallets on Bakkt's platform. So today, I'm going to look at what this partnership could mean for the adoption of crypto, particularly in the context of being a viable alternative to fiat currency for everyday payments. There have been some interesting examples in the last couple of years in the push to make cryptocurrencies legal tender. However, this isn't without some pain points that we also need to discuss. This will give us a more clear picture of where the industry could be headed now that Mastercard has leveraged its absolutely massive network. And as always, though this isn't financial advice, I'm going to recommend ways that you can potentially profit off of these news events, so be sure to stick around to the end of the video for those ideas. The first thing I need to do is break down Bakkt itself. The company is relatively new, having been founded in 2018 by the founders of the New York Stock Exchange. In the beginning, their goal was to make Bitcoin the world's first global currency, mainly by making a crypto exchange with US government oversight. The idea being that regulation is one of the key barriers to institutional adoption in crypto. Bakkt makes this work in a unique way by storing large amounts of Bitcoin, originally fewer than 100 Bitcoin, in cold storage. Institutional investors can put their Bitcoin in storage with Bakkt, and traders can then buy or sell on their exchange, all without Bitcoin ever leaving that one storage site. This means investors wouldn't be exposed to the security risks and costs of transacting through the blockchain. Think of it like the difference between using Venmo and a bank-to-bank wire transfer. It's a kind of layer 2 solution for crypto. For the last 3 years, this has been Bakkt's primary offer to attract investors, their kind of layer 2 crypto solution. But the deal with Mastercard isn't just for cold storage and futures trading. It's for all Mastercard holders to be able to earn and spend crypto by using their credit cards. Anywhere Mastercard is accepted. It's pretty big.
That's what she said.
Now, it's still pretty early in the game, but this move seems to have exponentially increased Bakkt's addressable market to an estimated $5.1 trillion by 2025. The credit card market by itself is an over $100 billion per year industry. Chump change for Elon Musk, but that's a lot for the rest of us.
Might be too much. I don't know.
What we've been told so far is that Mastercard users who convert their rewards points to crypto will be able to store or spend them through custodial wallets backed by Bakkt's cold storage facilities, meaning they'll connect the existing crypto market and the rest of the world. Ideally. Bakkt will offer users the ability to store not just their crypto rewards, but a full portfolio of digital assets, including hotel and airline points and even gift cards. However, Mastercard points out that Bakkt will be working behind the scenes, so the vast majority of cardholders may never actually see a Bakkt wallet, but to me, that's probably a good thing. The simpler that they can make crypto adoption for regular cryptocurrency users, everyone, the better it'll be for catalyzing the industry and making this mainstream. So investor sentiment is at an all-time high for Bakkt for good reason. For many, this represents a solution to long-standing concerns for mass crypto adoption. But one issue that's often talked about is what mass crypto adoption would actually look like. If only we had an example. Oh wait, El Salvador, who just a few months ago made Bitcoin legal tender. According to El Salvador's president, the goal here was to give Salvadorans a pathway to financial freedom through Bitcoin. The country even created their own Lightning Network-based wallet called Chivo, which is now used by nearly a third of the entire country's population. And that seems great until you learn that the government just basically airdropped $30 in Bitcoin to all adult citizens using the app. And free money is a great way to get someone to use a product.
How much do they want?
$300.
What?
Now, economists in the country have been a little bit worried though. Many of them view that El Salvador being put on the map for crypto entrepreneurs may not be the best thing ever. I went on this tangent about El Salvador to look at possible barriers to global crypto adoption. There aren't many countries that treat crypto as legal tender. In fact, El Salvador is the only one. And no, I'm not counting Microsoft accepting crypto through BitPay or Tesla maybe potentially one day accepting Bitcoin for cars. I'm referring to federal laws that require businesses to accept crypto as a means of payment. The first potential problem is volatility. Receiving a payment in crypto would mean accepting it at its face value, which can change rapidly from minute to minute, and it's kind of hard to operate a business under those circumstances. Volatility could practically make any savings on transaction fees irrelevant. Now that's linked to the second problem, which is people aren't really incentivized to hold and use Bitcoin like more common currencies within El Salvador. Some residents are worried about keeping their entire savings in Bitcoin, and you can't blame them. But it's good news that the country hasn't made Bitcoin the sole currency for the country. They still use the US dollar, and the government itself has invested $150 million into a trust to help people convert Bitcoin to dollars if they want to. Now, the third problem is the speed and cost of transacting on the blockchain. El Salvador uses a layer 2 Lightning solution called Chivo in that app, which helps bypass the glacial pace at which Bitcoin transactions get approved and added to the ledger. I mean, you simply just cannot stand at a Starbucks waiting 10 minutes for your transaction to process. The Lightning Network is essentially a way to complete multiple transactions without posting each one individually to the Bitcoin ledger. But this can add even more complexity, like additional routing fees to validators, needing multiple wallets, and additional conversion fees. So it's not perfect, but it's better than the alternative. Now, one last barrier I'll mention for now is the inherent anonymity of blockchain technology. Advocates see this as an advantage, citing crypto as a way to transact online without leaving a paper trail of your activities. But looking at the anonymity from the point of view of a whole nation's economy, this could potentially hurt adoption. Yes, cash is also anonymous. There isn't a record of every dollar you've ever used to buy cat food or drugs or cat food, but cash requires an in-person exchange or at least a good hiding spot. Your everyday criminal aside though, but I see the real issue here is political corruption, which is more common in developing countries that are more likely to adopt crypto. Taxpayer money can disappear completely into a crypto account with no record of who owns that wallet. Now, here's the thing. The Mastercard partnership with Bakkt can address most, if not all, of these 4 issues, and here's why. First, volatility in the crypto market isn't going away anytime soon, but cardholders will be able to choose stable coins, if they so please, when they convert their rewards points. Critics of the El Salvador Bitcoin law actually point to stable coins as a better way to minimize transaction costs in the traditional remittance market. And Bakkt's digital wallets will be able to hold a diverse set of digital assets, so this issue is largely solved. Second, when it comes to encouraging the adoption of crypto as a currency, the partnership will allow merchants to accept payments in crypto with the option to use Bakkt's on-the-spot conversion to dollars. This means stores can accept Cardano, for example, and have it immediately converted to US dollars if they so please. And this in itself would be massive for crypto adoption. Now, the solutions I see for issues number 3 and 4 lie in Bakkt's custodial wallet system. By having users store crypto assets off-chain, trading and spending end up working very similar to the Lightning Network, where transactions are made with legit currency but don't have to rely on the Bitcoin blockchain for every single transaction. This may, however, bring up concerns of centralization. And finally, on the fraud issue, Bakkt aims to help the US government regulate transactions, meaning that the currency in circulation from Mastercard rewards won't empower criminal organizations. An interesting fact that I found here was Italy doesn't actually allow cash transactions over $2,350 US dollars. The Italian government requires these transactions to be settled digitally to hedge against possible criminal activity. And again, you're probably thinking that this runs counter to why cryptocurrencies were invented in the first place, and you'd be completely right. However, in the case of Mastercard, they aren't creating a way for governments to interfere directly with how blockchains are governed. Instead, they've created an alternate system through which crypto can be earned and used without ever having to interact with the blockchain. Obviously, both sides can be argued when it comes to regulation, so let me know in the comments how you feel about all of this. Now, where does this leave us? So this isn't financial advice. One way that you can capitalize on this movement is to simply invest in Bakkt. I believe that there's a ton of potential here for empowering more people who are curious about crypto with considerably less risk. Of course, not all the decentralization either. Now, of course, it may be some time before we see the effects of global adoption and whether or not Mastercard and Bakkt will be the leaders of that movement. Plus, Bakkt is still still a startup with no sales and no profit that we can use to do a cash flow analysis. So this is still a high risk investment with a potential high reward. I will be watching this stock closely. Also, you'll want to keep an eye out for crypto cashback rewards on your very own credit card. And that's going to do it for today. Join my more than 8,000 satisfied Patreon members linked in the description below. You'll get even more content, buy alerts, a private community, a whole lot going on there. I'd like to thank you so much for watching, and I hope you have a profitable day.